Thanks,
Mish
guys.
for Fed chairman. I'm starting a campaign. Are you interested in the job?
I have
Fed
another
chairman? Huh?
Fed chairman. Oh my God,
Uh,
no, no, no. President of the
uh,
United States and Fed chairman, no.
okay, all right. So then it's great to have you back. Happy New Year, Michelle.
Same to you. Can I ask you a sort of a weird question? Is it better the lighting like the way it is now, or if I put
Yeah,
this on?
either's fine.
Okay.
That's good.
That's good. Okay, it's actually
Yeah,
better.
that's good. You look comfortable there. Listen, here we go again, huh? Another year of doing this, Michelle. Does it ever feel like like Groundhog Day to you, or deja vu, or does it always seem fresh?
It's
Another year.
I'd say maybe elements of both. Things repeat or rhyme, as they say, for
Yeah,
sure. And so you look at certain scenarios and you say, ah, yes, I remember when that happened back in the day. And
yeah,
yet also the way things work together and obviously how the world is changing, and particularly as we're looking at AI explosion, that's all fresh and new. So that's what makes this so much fun, is that it never really gets boring.
yeah. It's probably the best jigsaw puzzle that you could work on a daily basis, and we don't have to do brain exercises to stay sharp. All you have to do
Exactly.
is really try and figure out what's happening here. So, you have any themes or narratives for 2024 that have begun to play out or are about to play out?
Well, I came in fact, I mean, this on the very first day of the year, I happened to go on Fox Business with Cheryl Tassone,
Nice.
and she wanted. I had sent her a bunch of notes, my 17 predictions, and she picked out two to talk about. So the first one was that EVs would be the worst place to invest in this year,
Great
and
call.
so that certainly, yeah, that has
Yeah.
come to
Tesla
pass.
took out 200 yesterday. It's October lows. Is that because you saw that China was going to be flooding the market because of desperate need for business?
Well, that was definitely a reason. Obviously, BYD being a big competitor, but it was really more from observation that infrastructure just could not really keep up and support
Yeah,
the number of EVs out there. And then you get something like a weather event or a power down, and now you can't charge the car. So I think people that have EVs and rushed into it were starting to feel a bit disappointed. Unless you're like a local driver and you can plug in your garage, and even then, if there's a power out that lasts. And then I thought, the Hertz news came out. They're not moving used cars in EVs. And I just put it all together and I thought this was such a fun run, but
yeah,
reality was setting in. And that doesn't mean that EVs won't come back. I think they will. But, we were very careful. We went from a gas car to a hybrid for
smart.
that reason, because we
Yeah,
wanted to be able to drive locally on a battery, but we knew that as soon as we leave Santa Fe and Albuquerque, New Mexico, where we live, forget it.
yeah,
There's nothing. There's desert. So I think that mindset, even in people who live in much more populated areas, has been prevalent. So I'd like to see Tesla maybe get down around 150. I think that would be a compelling buy. I mean, the other
right.
thing that came out of this is that Kathy Wood got all famous again because, oh, I'm just buying Tesla, 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 and I'm just buying Bitcoin, Bitcoin, Bitcoin. And so that brings me to the second thing, that was that we knew that this was a buy into the spot ETF
Yeah,
on
yeah,
Bitcoin, and then it would come off. And we were actually saying, and I say we because I have to give credit where credit's due. Holden Milstein, who is our crypto guy, was saying 47,000, then down to about 37, 38,000. And that's exactly what's happened. But he says we're in accumulation
okay.
overall, and we're going into the halving. So he's looking for another run. But nonetheless, those were two how we came in. Now that has nothing to do with equities. In terms of equities, I've been kind of talking about this vanity trade where the consumer might switch from going out and traveling, and we're certainly seeing that that's happening as Expedia has come off a lot. and airlines have come off. Obviously, forget about Boeing; that's a separate story. But
Right.
and people are starting to take those diet drugs and look more into fashion and skincare and makeup. And so some of those stocks have done really well. So I was kind of focused on that. Obviously, I love Microsoft because I'm really interested in getting up to speed in Copilot, but it's not quite there yet. And but yet that stock is amazing. But that's not my thing. So really, if you really want to know what I'm looking at, is that overlay of the 70s to now and how beautifully matched it is, where we had 75 to 77 CPI come crashing down. From 2022 to 2024, CPI come crashing down. And what could be the event that turns this back to 1977, where everything started to go up, and of course screaming up until we saw the Volcker thing. And that's what I'm looking for. So I heard you talk
Okay.
about a few things that are interesting to me. One would be the dollar. Now, even though there's no real historical empirical data that the dollar versus gold or commodities has a given relationship that's firm. I mean, obviously, a super strong dollar is one thing, but we're ranging in the dollar right now. So I'm watching that. I'm watching silver to gold ratio. Silver actually started picking up against gold. I'm watching
Yeah.
the gold miners, which are struggling to stay here, but if they can catch a bid. And of course, my third thing is sugar. And this has been my big proof of why people think the super cycle is over, and it's not, because people don't know that you can have 40% drops, 20% rises, and then another 10% drop. I mean, volatility is inherent to a super cycle. So I haven't completely taken my mind off of that. And of course, oil being the X factor.
Okay. So you bring up the miners, and they are really, the valuations of miners are, it's amazing to me actually. So I mean, you look at something like Newmont. I know they've had trouble with their mines, but we're on the verge of testing not weekly, monthly, but yearly lows on Newmont. Here's Newmont. You have to go back to the COVID lows on a lot of these miners to look for support, which is, all the way back here, right? So,
Right. But take a
um,
look at GDX, Dale, because it's kind of like saying, well, sugar's up,
there you
why not
go.
Hershey? Well, Hershey's
Yeah,
gotten beaten up, while sugar
yeah,
is trading over 24 cents a pound right now.
yeah,
Yeah, so that's why I like to look at the GDX instead. And look at that. I mean, you have some interesting lines drawn there.
yeah.
So to me, this is trying to base out. And
Okay,
the momentum is shifting as well, from negative momentum to more positive momentum. I mean, clearly we want to see some type of price confirmation here. But I am actually out of gold. Believe it or not, I have not been out of gold for 2 years. But I got out of gold right around these levels because it's just ranging, and I'll get back in if it either crashes or breaks out. But GDX and silver are kind of what I've gotten into here a little bit,
yeah,
nibbling.
yeah. Here's what you're talking about. So we had this big breakout over 87 and a half, kept testing it, and we're putting in a pretty nice reversal week in the gold silver ratio. So
And we
I think you're
know,
on. Yeah,
right there. And Dale, to go to your original question about, has this been deja vu?
yeah.
Silver
Looks
gold
like
ratio
this.
is extremely important. And most people who were born after 1990 don't know about that.
Yeah. So yeah, because you need really this to be trending down to have a true bull market in precious metals, and silver to lead. And silver did. I mean, it's had a very interesting week. I thought that we were breaking down under 22 and a half until the next day it closed right back there.
And
So,
I got long at like 22.75.
okay,
And that's the thing. I mean, as we well know, there's opinions, and then there's making a trade. And
right.
I've really wanted to be we have quant models. So our quant models have been all about all the trend strength indicators and obviously getting into even leveraged semiconductors and AMD and Qs and all of that. But as a discretionary trader, I have been much more interested in having a balance between commodities and equities right now. And so that's kind of where I'm at. That's why I'm in oil. I have almost gotten out of it like 10 times. When it starts to come off, I'm like, it's going nowhere. And the same thing now with silver. I finally, like I said, got out of gold because I'm thinking to myself exactly what you just said. I know where I'm wrong. So
Yeah.
position size where it won't hurt. If you're right, add. And that's what I would do. And if I'm wrong, I'm out. There's no ego involved. It's methodical, strategic. This is the decades of experience. I sleep at night. I don't worry about it. And that's that. So we'll see. And we'll see if this is not the start of, especially with the numbers that came out today. I think it kind of supports the idea of the Fed lowering rates in March, right? Because, right, I mean, I haven't studied them because I've been hanging out with you, but I think PCE was pretty low. And but these are lagging indicators. And that's what I always like to tell people is, yeah, I mean, we already kind of know gas prices had come up, but they're coming back up again. At least I can see it at the gas stations here in town.
Bonds, Michelle. I mean, we had a tremendous run in TLT from, what was it, 82 to 100. We pulled back to 93. Is this a break to buy in the bonds here? Halfway back, maybe at 91 or so?
Well, I kind of was thinking one of my predictions was that bonds would be in a range from 92 to 102. So we kind of got
Okay.
close to that 92
Okay.
level, not quite there.
Yeah.
And so here we are, like just a little bit off the lows. So if you really believe, see, the thing about the bonds is that we're still outside of the wisdom of 60/40 portfolio, right? I mean, we're not there. We're not back there yet.
No.
And so if we're going to look at bonds as a flight to safety, we don't need it, right?
It's
Risk
still
on,
a
risk on.
risk on, it's a risk on asset. It's changed to a third
Exactly.
world bond market.
Exactly. That's very astute to say it like that, because that's a better way of what I was trying to say. So to me, the way I would be interested in getting back into something like the long bonds, that's what I'm saying, the 92 to 102, would be if I really thought the environment was going to go more towards a stagflationary or the super cycle was going to set in, because then the Fed is really stuck and they would have to lower rates and that would goose the TLTs. Until that kind of event, even with the charts, I just look at it as range bound and to me, not where I'd rather be. I still think fixed income is not a bad place to be if you can lock in anywhere from 5, 6 to 8%, depending on the type of bond, part of your portfolio, and kind of stay away from the long bonds for now.
Okay, so how about grains, Michelle? I mean, they've been, so many false starts. Um, Maybe getting another, attempt around this $12 level in beans. I know you've been paying attention to them because, I get your free updates in my email, and everyone should sign up to get Mish's stuff and to give you the flavor of what she does, and you could take it to the paywall level after that, but no risk in checking out what she's keeping her eye on. So you put out some excellent stuff for free, Mish.
Well, thank you. And I do that because, well, because we've been in this business for so long, and yes, so obviously traders, and we have tools and all kinds of things that people can buy. But at the end of the day, I'm a teacher, and I've always been a
Like
teacher.
that.
I love teaching. And so this is just a short little bit narrative into, okay,
Yeah.
what am I looking at right now to help people? And that's why we do this show and spaces and go on media. So I feel at this point very comfortable in not worrying about free content. In fact, if anything, I encourage and think the community of people like us are extremely generous in nature because there is a lot of great stuff out there. Yeah, I hope you enjoy what I do. I try to switch between my economic modern family, and we could talk about that in a moment, and
Okay.
commodities. I kind of go both ways. So to answer your question on grains, DBI had that split, and it went from like 22. It closed at multi-month highs and then
Yeah.
had the split and it crashed back down, based out, and now has been coming back up again. Obviously, softs are a part of it, and coffee had made a move, and sugar made a move, and obviously cocoa, that's been the big story, live cattle. So yeah, I mean, the grains haven't been as interesting. Part of that story is China, because China hasn't been buying as much, but then we also have major weather problems with drought and El Nino. And I mean, one of the reasons why sugar's up so much is because India has not been able to produce. Thailand has not been able to produce. They've actually curtailed their exporting of these. And that's what could happen with the grain markets. Potentially, we have growing season right now in the US.
Yeah. Yeah.
Anything screws up. Am I in the
There's
grain
not a
market?
lot of carryover, is there?
Right. And that's the thing, is that, we're still coming back from the whole COVID thing in a sense. Now, grains can hit the ground much better than, say, some of the other type of commodities like coffee. Those trees, I mean, they basically yield one time a year, and if there's a frost, they're destroyed. But we're in summer now in Brazil, and they're having a drought, and that's why coffee prices have gone up. So, you got to understand, when you're playing these grains and commodities, it doesn't net in terms of the soft commodities. You're not necessarily playing the inflation narrative the way you would be looking at, let's say, the metals. Back in the late 70s, not every commodity rallied. So I'm really watching more than the grains right now. Obviously, sugar, because I think sugar is a great barometer for social unrest. It's in everything. So, food prices will have to go up. That's going to be inflationary. Wheat, corn, soybeans. But I'm also looking at copper, steel, obviously oil, as I mentioned before, that silver, gold. I mean, even lumber started coming back up. That's another interesting indicator. Clearly, the people who have been looking for recession, another mixed number, because GDP is lower, right? So what, isn't it 2/4 lower GDP equals recession? But yet that happened a couple of years ago, and everyone went, no recession. So, this is what makes the game exciting, because the rules change all the time, and people get frustrated by that, but you got to kind of be with the times.
Natural gas had a huge gap down, the Widowmaker. I don't know if you let your husband trade that, but anyway, gap down, filled the gap yesterday,
Mm-hmm.
and God, it's so cheap.
Yeah, what, like 225 or something
Yeah,
like that?
yeah,
Yeah.
yeah,
Here's another example. People have long memories and short memories at the same time. So everybody thinks, because it went nuts in 2021, and that was my big call, on national TV, when I said to Charles Payne, oh, natural gas is going to go much higher. He goes, wow, no, that's the widow man. I wouldn't touch that. And then, but now I don't feel that way. I think natural gas, there's a lot of, obviously, gas around. There's also, I'm reading, deals that are being made under the table with Russia and pipelines and things like that. If it got, say, through 275, through 3, hung out
yeah,
there, then I might be more interested. But it's just another one of those instruments that's just stuck in a range and
yeah.
not really.
Three big level. Failed there a few times
Yeah.
psychologically.
So why go somewhere until there's a reason to go there?
I know you don't like to get political, but we have to, because it's an election year.
Oh
And
yeah,
I'm not saying
absolutely.
you have to stake out a side, but as a trader,
It's really hard to take a side right now. You could make cases for both sides in terms of, my
or
feeling.
how about cases for no sides?
Oh, no sides, exactly. I try to keep politics. My favorite thing to say is, 14 years on the Commodities Exchange. I stood shoulder to shoulder with men for all that time, and I could tell you that I didn't know how any of them voted. I really didn't. We
Okay,
didn't discuss it.
didn't
So
matter.
it didn't matter. But and I
Only out trades mattered.
but in terms of how this might impact the market, I
Yeah,
don't I don't know. I mean, on one level, look at people obviously hate Biden, but yeah, here we are at all-time highs. Inflation has come off. Okay, our growth is stunted, but it's been stunted for a while. We're in wars, but yet it's not really affecting us Americans on our own soil, like it did in 9/11. it's not, things are not that bad. So I wonder the middle America, what they're going to go to the voting thing in November if all things stay the same and say, you know what, things aren't so bad. Why do I want now somebody who really can potentially be much more in terms of mixing it up when it comes, especially foreign policy, et cetera. So I don't know. I don't know. I just can't believe that we're a country that has so many brilliant minds in it, and this is who we're serving up.
Yeah.
That's about as political I'm going to get, and
Yeah.
I will obviously watch things as they progress. A Trump presidency, I would assume, could be inflationary, even more inflationary, because he likes a softer dollar, he likes lower interest rates,
Tax
um,
cuts permanent.
tax cuts, government spending. I mean, the whole notion that only Democrats spend money is kind of a fallacy. We'll see. We'll see.
Don't you think how the market's trading and maybe the market is putting on a great show the last 3 months and maybe through the first quarter, and what the market is doing this summer has never been more important as far as an outcome of an election?
I think again another astute observation, because we have these calendar ranges that we like to look at. They're six
First
months.
5 days?
Well, it's the first 10 trading days sets
Okay.
January calendar range. And it's
Okay.
really interesting if you look and see what's above the calendar range, what's stuck in the middle, all these instruments we're talking about, and what might be breaking down. Nothing has really actually broken down except for Tesla. Tesla is definitely now in a downtrend, no doubt about it. Whereas, you look at something like Nvidia, and that's obviously
Yeah.
broken out with semiconductors. So that sets a trend for 6 months. That doesn't mean we can't see up and down, but essentially that 6 month calendar range high could become support, or last July's calendar range high, which would be a little bit lower, could become support. But that's your support area. July it resets, and then we can see how things line up from the January 6 months and what is projected for the next 6 months from July on. And yes, and it could be that if you put those together, you'll really have a much better idea of what the market is feeling about the election and the new or incumbent administration that might be coming in.
Okay, guys, I don't think that it's ever been more important, Michele, to see where markets are trading. It's amazing that usually the markets wait for the election for it to be important, but I don't think there's any waiting around anymore. The
Yeah, for
market will
anything.
vote. Yeah,
Right. I mean, listen, we all know AI is the thing, and will continue to be the thing. But yet the move in AI in anticipation of how much it's going to control all of our lives probably has been greater than the reality of where we are at right now. I mean, that doesn't mean it can't go higher. There are people who think that Nvidia is still cheap based on PE
yeah,
if you look at certain formulas. So I'm a nervous Nelly buying incredible strength. That's just not my style, unless
yeah,
it's a commodity strength, because now we're not talking about PEs, we're talking about emotional plays. But when it comes to equities, I like to look at things that I think might be emerging, where I have a risk that I can wrap my head around, as opposed to I'm dying to buy Microsoft, but I'm like, should I risk to under 395? And then I mean, probably the answer is yes, but I haven't done it yet. So,
all right. Well, it's been great having you and your pup on camera today.
oh, is my
And
dog in the room with me? Oh, there he is. Yes, Raul.
yes, yeah, and he's very relaxed with every position that you have on, right? So, he'd be bugging you if he wasn't. Mish, always great to have you, and I want to thank you for coming on to Face all these years and edifying the community, and really appreciate your giving spirit to come out here and talk to us and share your outlooks for half an hour every quarter.
Oh,
I
thank you
want to
so
thank
much.
you.
It's really great to be on. I set my clock to
All
it.
right. So, Mish, best place for people to go is to your website. They can follow you on X at Market Minute.
Yeah,
And
marketgauge.com is the website. Market Minute is my X handle.
right.
I'm all over the place. So yeah, it's not, if you want to find me, pretty easy to do so.
All right. Well, Michele Schneider, everybody. one of the best intermarket analysts that I know, and I know a few. And want to thank you for giving us your, your view and what we should be paying attention to.
Thank you so much, Dale. I hope you stay well. You look great.
Thank you. You do
Okay.
too, Mish.
Well, thank you. All right.
We're fans of you here. Everyone's a fan. I am. I root for you guys, and hope that 2024 is your best year ever, and not just in the markets.
Thank you so much.
All right, Michele Schneider, everybody, follow her. Follow her on X and go to her website at marketgauge.com and check out what they have to offer. And that's going to be a wrap. Go
I
ahead,
just want
Michele.
to, yeah, I just want to say thanks to Blake and Stelios as well, who put up my stuff every day on their site. So thank you for that, and then post it.
Okay. Yeah. They only put up quality content, so you shouldn't be surprised. So I'll pass it on. I don't think they're here, but I'll let them know you gave them some kudos.
Okay,
Thanks,
great.
Mish.
Thank
All
you,
right.
Dale. Take
Take it
care.
easy, Mish.
Thank everybody.
See you in the
Bye.
spring.
Yeah.
All right.
Bye.
Adios. Bye-bye. So don't just count your pips, count your blessings, everyone, and see you tomorrow to wrap it. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.